Awesome.
So Tom, welcome.
Hey, thanks. Great to be here, Josh.
Yeah. So someone introduced me to Anasova and I've been tinkering with it. Then I saw that you were an advisor in I don't know what chapter in life you're on, but maybe the middle chapters, and now you're on to a new chapter. And I felt like you have a cool story to share. So wanted to have you on.
Well, thanks. It's great to be here.
And so you got into the stock market like trading at like a pretty good time, right? Like mid 90s.
I went to Wall Street camp when I was 13.
They
And
have
so,
no way.
yeah,
They have a camp?
there was a camp. It was a Washington Workshops has these as a Wall Street seminar. And so we actually were in these dorms at NYU, and it was really cool. It was a Wall Street camp. So actually I wasn't 13, I was 16 when we went to the camp. So yeah, super fun. But I came out, I started out in investment banking in 1996 and then was in New York for a few years. And then I moved to become a financial advisor I got my number in January of 2000.
Your number in terms of
Production number was what is registered,
they gave you your
my credentials.
your cell number or your
Yes,
jail number.
right. Exactly. Exactly.
What was the camp like? Because I didn't know there was a Wall Street camp, and going to those sort of camps definitely. I know it doesn't get you any popularity points in high school, that's for sure.
No, definitely not. But it was really cool. We got to do so we toured things like the Federal Reserve. We got to go on the floor of the exchange. And the exchange was different in those days, but seeing things like that, it's just, we got to see the gold reserves, actually the reserves in the basement of the New York Fed. The ones that like they go after in Die Hard, if you saw that like Die Hard 5 or whatever, that was one of the later ones. We saw toured different companies and got to go to different like financial headquarters, which was just really cool. It was just very eye-opening for me. It made me really excited about it. I kind of knew what I wanted to do.
How how important was it that you got exposed to that at that age?
Super important. I mean, like I think it changed a lot of my path of knowing, I went into an undergraduate business school, and then I went into a business school, and it created kind of a lifelong passion for finance, which is probably kind of boring and weird, but yeah.
Yeah, I mean, I always had an interest in finance, but I didn't know I was learning about it at the time. Like you like look back and you're like, oh, I was being exposed to all these things, but it doesn't really seem like learning when you're growing up. It's just like, hey, I'm being exposed to it. This is cool. I have an interest in it. Or your parents take you somewhere and you're like, this is boring. I have no interest in this, even though they might be interested in it. It's like figuring out like what your interests are and what was it about finance that drew you in? Was it the people yelling on Wall Street? Was it just being a numbers person?
I don't know. Well, it was my first trip to New York City, and I grew up in Cedar Rapids, Iowa, and so just the energy of the city was just like exciting to me. The We would walk around. We all had like sport coats and ties, and there was just a really fun energy about everywhere that we went that I just felt really super cool.
So you got into the business in the mid 90s and then got your number in 2000.
Mhm.
What was that position? You said a trader?
No, so I was an analyst in investment banking. There was a firm called Bankers Trust, and then we bought Alex Brown while I was there, and so it became BT Alex Brown. And then actually, while I was there, Deutsche Bank purchased us. The legacy institution today is Deutsche Bank, and I was in real estate investment banking. I was an analyst, just working very long hours, focused on both kind of sometimes we're using the bank's capital to purchase distressed debt in Mexico after their banking crisis. Other times we were making loans against commercial malls. It was a very interesting and eclectic mix of experiences.
Playing Monopoly with real things.
Exactly. Monopoly with real things. Yes.
You owe me rent. Hey, I'll trade you these properties for these properties.
Right. Yes.
Yeah, and I don't feel like a lot of people understand what investment banking is. People are like, oh, people in investment banking must make a lot of money. Well, you do make a pretty good living, but you probably had to sleep at an office a few times in your early days.
you work a tremendous, tremendous amount, and you're putting in a lot of hours because it's a trade that in a lot of ways is difficult to teach. You just kind of have to experience. But essentially, I mean, companies raise capital and they primarily do that through debt or equity. And that capital is raised through institutions. And that's essentially the part of what an investment bank is doing is helping companies raise money.
And where do they get the money from? Like for
Invest
anyone out there who's like listening who doesn't know anything about this.
It's a nice full circle. It comes back to investors. So when you're buying a stock, that stock was originally issued by a company,
Mm-hmm.
an investment bank, or when you're purchasing a bond, that bond was issued by a government. And so there's actually there could be local governments. So there's bankers that cover local governments, but a bond issued by a company would be another form of a debt issuance. But all of those securities or investments that people invest in more often than not, were originated through an investment bank.
What was the coolest deal you worked on that still sticks with you? If you're able to share.
Yeah, we were buying distressed debt in Mexico was really pretty cool. So Mexico had a banking crisis in the 90s, and they kind of sat on their debt for a while. So after we had a banking crisis here, we formed something called the Resolution Trust Company, and people would buy this distressed debt from banks. Mexico actually sat on their debt for a while, and so the debt became more distressed. And so we were down first advising them on how to kind of run a process, and then it was a lot of uh, bankers from multiple firms kind of descending in Mexico City, and we were bidding on these pools of loans. And so you didn't exactly know what you were buying, and so you had to do this kind of statistical and probability analysis of it was a and then you kind of sample like a few loans and then apply that sampling model to the rest of the portfolio. It was really super cool.
Would it be considered like the junk bond market, those sort of assets?
Yeah, it's probably in the junkiest of junk bonds is what we were actually probably buying. So yeah.
Do you remember how like that deal worked out? Because a lot of people are like, oh, stay away from junk bonds and stuff like that. However, if you do your homework and you look at a heads I win, tails I don't lose much scenario, I mean, there could be what I mean, one person's junk is another person's gold if you know how to, value something.
Yeah. You know the it's interesting because it's likely that whoever is listening to this, I would discourage you from anyone to really look at the asset class. It's really well managed by professionals and not individuals, and you want to have a lot of diversification. And we can talk more about that. But the pure mechanics of it, if in the rare times, if you can buy a bond at let's say 50 cents on the dollar, or a lot of this was trading at like 30 cents on the dollar, then you kind of get a really potentially neat combination because you can have both an income stream and the appreciation of the asset over time. So if you find the right distressed debt opportunities, there can be some really neat ways to make some great money on a risk adjusted basis in particular.
Yeah, so I mean, as long as it works out, if you buy something 30 cents on the dollar and they don't go belly up, you get a full dollar back. So it's like a free 70 cents plus any
Yeah.
interest and coupon payments that they pay you. So obviously you got to do your homework to invest wisely in those things. You can't just go on your trader platform and do a search and be like, "Oh, this looks good, let me buy it."
Yeah, you hit the nail on the head. And you know, the other thing you can do is if you get it cheap enough, if you get it at let's say 30 or to 50 cents, we'll use 30 because that's what we had. If you buy it actually at 30 cents and you could settle with someone to sell it at 60 cents and say, "Hey, you're gonna," so then they're getting relieved of a whole bunch of their debt and out from underneath it. You made 100% return on your money there. So that would be an example of a very great trade.
Yeah. Well, if you're an institution, that's easier to do, but for like even if you have like a $10 million account, like the sort of volume you're moving in those sort of deals is probably much greater than
Yeah.
that, correct? Or no?
Every so often there will be cracks in the public market securities where the general rule of thumb is if junk bonds are trading at kind of record high prices, you often want to avoid. I mean, the goal is buy low and sell high, but a lot of times when they look just terrible, and everyone's like, that's an awful asset class. That's a very interesting time to then start looking at it, because typically, so there are like junk bond ETFs, and then you have diversification, and sometimes they'll just trade at these extremely deep discounts, and they can be, a little bit interesting at that point. But that is not investment advice, and I would discourage people from kind of even steering into that path until later, as you said.
Yep. I mean, I remember during COVID, I bought some oil stuff, and one of our clients called me and was like, "Hey, Josh, should we be buying this right now?" And I was like, "Hey, if you go outside with like a shovel and you scoop up the dirt in your front yard, it's literally worth more than oil right now. That's not going to last." So, I mean, you have these opportunities that come up, and you just have to know like where to. You just gotta have to keep your eyes, your ears, everything open. Like you have to always be looking. You always have to be, because I mean, it's a matter of when things get out of balance. You have to know where the strike, because those opportunities don't happen too often. Um,
You're
so
absolutely right. That oil opportunity was exceptional, and that's one that you can look at and just in retrospect and just be like, that was a clear and obvious opportunity to.
Tom, I swear Warren Buffett's like following me or something, man. Like there was a string of events that happened where like I would invest in something and then he would invest in something. It was very weird. Like
Probably is following.
he could be, I don't know.
Yeah.
Obviously he has a lot more to work with than I do, but it's like strange. Like I remember like looking at some airline, I'm just being general because obviously don't want to give someone specifics, but like I was looking at like an airline, like a really good one that everyone likes. That's like the happy one. And I was like, this is just really undervalued. Then he bought it, and I was like, you know what, I'm getting out of this. Like, why is he buying airlines? And he got out of it. Then I looked at like an oil company that he got in and out of real quick, and like I did that as well. And then ultimately, I had on my watch list for some time, like years. I just never bought it because I didn't understand it. Was a makeup company, and then he recently this year apparently is getting in the makeup. So it's been really
Hey.
strange to see that. Um, but hey, I don't know. Maybe I'm onto something. Maybe it's just luck, but who knows? So you were a trader. Then what was your next step after doing the investment banking thing? Because obviously, I, I feel like that's just like not a good long term path. Like I don't feel like anyone can work that hard that long for like forever. It's just not
Yeah.
feasible.
Yeah. So technically, there is a trading side of the house. I was on the banking side. In its details, it doesn't really matter. But for clarification, I never actually traded. I was on the investment banking side. And we can talk about those differences if that's interesting, but it's pretty boring. I moved, my mom called me and said that she was going to be retiring as a financial advisor and asked if I wanted to move back to Cedar Rapids, Iowa. So I moved from New York City to Cedar Rapids to partner with her. And uh, so, yeah, that's where I grew up. I'd gone away to school in St. Louis, moved out to New York, and then came back to Iowa to start out at A.G. Edwards at the time.
But that was a big change.
It was a very big change. It was a
How did
very
you
big.
how did you deal with that going from Iowa to the city to back to Iowa?
Yeah, it was quite a bit of a transition. There were parts of it that were great because there's just Iowa's a great place to live. I love it. I love the quality of life there. Um, but it was definitely a big change. So, everything has pros and cons, but it was a really nice time in life and a great transition.
So your mom had been in the business, so you've always been exposed to it. Now you go back to working with your mom. How was that dynamic?
So good. So
Because you were working as like an investment banker, working at the city. Now you're coming back to Iowa, a little bit slower paced.
yeah.
I feel like the energy is way different.
It is way different. Uh, so she started in the industry in 1987, and there were very few women that were in the industry.
Good year.
And what's even more interesting is that she was a branch manager. And so she just had really interesting exposure and great perspective, and really taught me a tremendous amount. In fact, so she was a teacher by background. So I'd kind of come at everything from this like academic and institutional perspective, and she just came at things with very simple stories, and nobody actually cared about any of the technical parts of things. It's really how do you convey these complex ideas, and she has a real gift at just explaining complex things simply, and really taught me a tremendous amount about that.
I feel like a teacher, the amount of patience that she probably had was a superpower that not a lot of advisors had, especially if I
Yeah,
ask you what happened in 1987, 10 times out of 10, the answer is the same.
yeah,
Black Monday. However, the market was positive that year.
yeah.
People don't even realize that.
It's
They don't
amazing.
they don't
Yeah.
remember that piece. Everyone always remembers the negative. Oh, Black Monday. The
Yes.
market actually rebounded a ton and then went on a pretty good run for a while.
Yeah. Yeah. Yeah, it's really it is amazing. And the interesting thing is she was in her training program actually when that during Black Monday, and then came out after
She
that.
was in
But
training during Black Monday.
training during
She
Black
still
Monday.
went through with it.
Yeah. But what's amazing about that is so her career actually started at Payne Weber, um, a separate kind of story, and that firm's no longer around. But the interesting thing about that, her training program was out in San Francisco. I got to go out and see her in the training program and meet a lot of the people that were in it. That's where a lot of my kind of interest and passion started, very early. But it was a great time to go through the training program because people discovered that they need advice. And so, Black Monday, we haven't experienced a shock like that for a while. It will happen again. And after those, people realize I need advice. This is definitely not an easy business. And there's a tremendous role for advice.
I would say 2020 was pretty close.
Yeah.
2000, I mean, we had what, 2000,
2008 was,
2008,
yeah,
2020. 2022 is almost more painful than 2020 because of how like drawn out it was. Like 2020
yeah,
was like it's down and then recovered pretty fast, but like 2022 with the interest rates going up, it was just kind of like
yeah,
what's going to happen because even conservative investors got killed because you're
yeah,
in half bonds, half stocks. The bonds went down a ton and also equities went down as well. So what did
yeah.
you learn from your mom that was like the biggest game changer for you to separate yourself from the testosterone driven industry of financial advising, especially in the late 80s?
I think big thing I learned is to keep it simple. You don't need to do a lot of that. So it keep it simple and keep it big picture in both what you're thinking about and how you're focusing and how you're approaching things. Everything should really fit on a page. And she would draw a lot of pictures, and that's how I like to do it. Is I like to tell stories. She tells stories and draws pictures, and that's what I like to do. Tell stories and draw pictures. You can represent complex ideas in pictures.
How complex are these pictures? Because I could barely write my name, my handwriting's so bad.
Oh, my handwriting too. And I'm like the worst artist. No, just I'll give you a couple of examples.
Tell me a story.
A story. I'll tell you a story because I can't really draw you a picture very well right now.
Paint me
So
a picture.
um, she would say things like, "There's a in trying to explain the difference between value and growth." She would say, "Imagine that it's a hot day in July, and you go to the mall and you see a beautiful cashmere sweater." And you buy it and it's on sale for 50% off. And you take it home and you put it in your drawer and you wear it to your holiday party. And everyone says, "You look great." And you say, "I feel great. And I bought this sweater for 50% off because you got it when it was, out of season." Growth is it's the day before the holiday party. You walk into the mall, the cashmere sweater is like full price. You come in and you wear it. Everyone says you look great. You say, "I feel great," but you paid a lot for that sweater. So the concept is buying things that are out of favor and putting them in a drawer versus kind of paying the top price for what's the most popular and in season thing at the time. That's how she would explain, for example, the difference between value and growth.
Yeah, I mean, I don't know if she was managing money, but when you're looking for good investments, you almost have to look into the future. Like, where is the future going?
Hmm.
Be ahead of it. Kind of like when when Jeff Bezos needed money for Amazon, and he was raising money, and he'd give them their pitch, and they were asking him, Jeff, what is the internet? Like, people didn't even know what the internet was. He had to
Yeah.
explain what the internet was. Obviously, if I went up to someone in a coffee shop, I was like, "Hey, can you explain the internet to me?" They would just look at me like I'm a fool.
Right. And
However, 20 years ago, which wasn't that long ago, a lot of people still weren't on the internet.
right. Absolutely.
So you got into the business with your mom,
Yep.
and it seems like you took it to like the next level. How did you do that?
So I was a client of mine was mailed a flyer from Merrill Lynch offering a very attractive mortgage. And I looked at the flyer, and the first thing that I said is, "Well, that's too good to be true. It can't be." And the person said, "Well, I don't think Merrill Lynch is mailing something that's not true."
Huh.
And so, shortly thereafter, someone from Merrill Lynch had called me trying to recruit me to come over. And I said, "Well, I'll meet with you because I want to understand this mortgage product." And that wasn't exactly what they were expecting, but I learned it's a fascinating product, and it's a topic for another day. But of course, the product was real and it was true. And I started to learn about the different ways that in the early 2000s that Merrill Lynch was had an incredible lending capacity to deliver really, really powerful lending solutions. And I saw those and I was just like, that is the story that I want to tell. It's so much better for me to tell you that I can manage both sides of your balance sheet, that I can deliver these very powerful lending solutions. So we moved from A.J. Edwards to Merrill Lynch, and I started really kind of embracing thinking and acting like a personal CFO. Merrill was very gracious and sponsored me at the University of Chicago, so I was getting my MBA, and all of these worlds were just converging in a neat way. So as I started telling that story to both individuals, I kind of moved up market and who I was working with as a personal financial advisor. And then I also started coaching and training other financial advisors at Merrill Lynch. And so that was maybe chapter 3 we're on. So that was about a decade journey there.
So you were at Merrill, and then you eventually left. What what transpired that caused you to decide to go to the next chapter?
Um, so I really liked a whole lot of things about that firm and culture. Of course, in 2008, Merrill Lynch was acquired by Bank of America, and a lot of our leadership went to a firm, Morgan Stanley. And the so as a lot of those people that I was very close to from the decade that we'd had, but after '08, a lot of things started to change, essentially culturally within the organization and across the industry. So I stayed there until 2011, but Morgan Stanley had been calling on me for a bit. And so in 2011, they were still pretty early in their lending journey, surprisingly. Merrill was dramatically ahead of where they were. There's a lot of legacy stories for why some of that is. But the strategic initiative was to close that gap. And so I came over and repeated. So I released a book called The Value of Debt. Um, a few people have read it, but they kindly purchased a bunch of copies of it. So that's how it got a lot of its accolades, and it led to a little bit of a series of releasing a few more books around it. But started coaching and training advisors at Morgan Stanley, was managing my wealth management practice there, and kind of moved into a neat and different team structure. So that was, I guess, chapter 4.
Got it. So you jumped around a few times, and now you're completely out of the financial business. What decision, what led you to that decision? Because it seems like you love working with people, you love helping people. It's in your
Yeah.
blood. Like, your mom did this. You worked with your mom, you worked on investment banking. Like, how do you come to the conclusion of like, hey, like, I'm just gonna put this in my past and jump to what you're doing now at Anasova?
Yeah, there was a critical step in the middle of this, and that is that after about after the first book came out, I was speaking at a Barron's conference. It's Barron's is a magazine, of course, and slash newspaper, and they have a conference for financial advisors. And I was presenting there and talking about the power of managing both sides of the balance sheet, thinking and acting like a personal CFO, and in particular talking about the power of wealth management lending. And these advisors came up to me, some of the top advisors in the country afterwards, and they said, I love these ideas. How do I embrace these solutions? And what I realized was there's a big gap between what some of the large firms were doing and some of the independent firms and some of the solutions that they had in the lending space. So I got a group of people together and literally around the kitchen table, and we started studying the gap and figuring out why is there this gap in lending solutions. And we figured it was really from primarily a technology and delivery perspective, as well as an awareness issue. So started to create a company. Was originally called Better Debt, and then it was renamed as Supernova. What Supernova is it's primarily it's a very specific lending technology company. We can talk more about it. But the way a wealth management loan works is complex. So just how you said people don't know about the internet, in the old days, these loans were made by hand. So if you wanted to extend one to a client, you'd actually have to mail paper to them. They would have to sign it. So the advisor's in one place, the bank is in another, person's in another. So anyway, we digitized all of it. We put it in the cloud. We made all these different systems talk to each other, and it really has had a lot of tremendous growth. So in 2018, I sold half of my stake in it to the former CTO of Morningstar, which is a technology company. But I had to leave Morgan Stanley. I had to make a very, very, very difficult decision between being at Morgan Stanley or Supernova. And that was, I chose Supernova because I saw the opportunity there. Then I sold half of my stake in it because it became a very technological company, which is, I'm not a technologist, obviously. And took 2019 to learn to sail. And then I started Anasova in 2020. So that's essentially the journey in a nutshell.
How long did you ponder this decision
Which one?
to leave wealth management behind?
Whew. Well, I mean, I was trying to have my foot in both worlds for so Supernova was officially started in 2014, and I left Morgan Stanley in 2016. So
Mhm.
had my foot in both worlds for a 2 year period of time, but that was becoming increasingly complicated from just a number of different reasons and was not going to be sustainable.
Yeah. Well, some people out there have trouble leaving a job because they get comfortable to attempt to find a better job. You basically gave up a whole identity.
Yeah. Yeah, and it was very difficult because it didn't a lot of the reason it was difficult is I wasn't able to control the process essentially very well. So like you're in or you're out. And so then the second that you're out, you can't reach out to those relationships. I mean, a lot of my client relationships were like family to me. And I literally once you're then out, and the way that this structure and world works, you're out. I can no longer be your advisor. I can't talk to you about these things. It's a very that was uh that was perhaps the most difficult part of it, and one that I hadn't kind of completely understood in the decision making process exactly.
I feel like that's a tough decision to make because it's like you almost have to like
Great.
give up something completely to go for like something that's exciting and it could work and it could not work.
Yeah, definitely the road less traveled, and it was a bumpy, difficult road with a lot more gray hair now. So yeah.
And now doing Anasova, and that's where we met. And how how is that helping the financial industry? Because you're offering these free financial plans to folks online. And what have you been seeing that's allowing people to like help them make smarter financial choices?
Yeah. So, so the way that we started out was essentially a direct-to-consumer model, and the hypothesis that we had was money is the number one cause of stress, which is interesting and amazing if you actually just stop and think about that for a second. Do you believe that money is the number one cause of stress?
It's typically people, it's money, religion, and family are like the top three priorities for people.
Yeah,
Um, Having money problems could cause strains in your family, especially if you don't have enough money. Um, that's the step one is like, hey, like some people are really struggling out there and they just don't know what to do. Just because they don't have like the right upbringing or they don't understand like, hey, I'm working this job, but no one's out there telling them like, hey, like you could actually go make more money selling cars
right,
and really
right,
change your life. I mean, selling cars may not be what you want to do, but you can go make six figures selling cars if you're making 40, 50 grand a year and double your income pretty much overnight if you work at it. And that's where a lot of people I feel like, you know, some people just like to complain anyway. Like some people live in misery. But yeah, money is definitely a big stress. I mean, for me, it's more of like not having enough money, not knowing if I'm going to succeed, knowing if I'm on the right path, basically embracing the unknown. How do you
yeah,
embrace the unknown and like it?
yeah. You want to know something interesting that we've discovered? So we have thousands and thousands, tens of thousands of data points. In fact, the actual data is so on each plan, we get about 50 points of data, and we've run tens of thousands of plans. And so you have this really cool universe of data. And one question that we ask people, every person who takes a plan, we ask them on a scale of 1 to 10, how stressed are you about money? Right. So it's a financial stress question. I can't remember exactly how it's worded, but like, how stressed are you? So then when they answer that, we can do a regression analysis and find out correlations of what makes people have high levels of stress and what makes people have low levels of stress. And the interesting thing is, it's actually more about your money habits than it is how much you make or how much you have. So I'll give you an example. If you have no credit card debt and you have $10,000 in cash or a 3 month or more reserve, it's actually the correlation drops off at more than three. So you're not paycheck to paycheck. You have a good emergency reserve. You have no credit card debt and you're saving 15% of your income. You have less stress than the average millionaire. Isn't that interesting?
It's a simpler life. I was
It's a
my wife and
simpler
I
life.
just started watching the Mr. McMahon documentary on Netflix. Vince McMahon from the WWE.
Yeah, I know that I know who that
I
I
feel
don't
like
know.
that man lives stressed. He like doesn't know life without stress. Like just looking at him. Um, and I mean, I believe the WWE is worth at least $1 billion now. But they were talking about when they went to do WrestleMania 1, that was with Hulk Hogan and Andre the Giant.
Yeah.
They like borrowed as much as they could to like just do it.
Wow.
And like they were interviewing their kids. They're like, yeah, like they're talking about like doing the second mortgage thing, and we didn't really know what it was, but they're doing this cool thing through like for work, and we had no idea what they were risking to pull that off.
Wow. I have to watch it. I have heard about it, but I haven't seen it, and I don't know much about the story.
Yeah, I mean it's a crazy business, and there's a lot of life lessons in there. Basically, dude's crazy. I mean,
Yeah.
I feel like you have to be crazy to be in the wrestling business.
Probably right. Yeah.
Um, but yeah, I mean, taking risk. I don't know how to live without taking like what people would say is like crazy, such as I worked at Merrill Bank of America after they were bought, and everyone said how stupid I was for wanting to leave that job because they're like, oh, you're doing well, you're making money, blah blah blah. I was like, well, once you make over I don't know when this figure came out, but it was like $60,000. There's no more happiness money really provides you once your uh, daily bills are taken care of, and then you get a little money bank. Referring to what you're saying, after that, like it just buys stuff and experiences, and I look at it as more of like, hey, do I want the money or do I want the time? And I chose the time. And sometimes I think like, man, like, was this the right decision? Was it not? And I don't know. I don't know if it was the right decision or not. And time will tell.
I like your attitude and how you're looking at it. And I know for a fact that, of course, you need money to cover the basic needs. And there's a large group that's pushing through that zone. But it is also true that once you're over a certain level, it's more money, more problems. The money does not bring happiness. There's the time is what's really valuable. Everything you're saying is absolutely spot on. Which branch were you in? Which office?
Uh, I was in Jacksonville. It was a phone center. I never
Uh,
I never worked in a like a Merrill Lynch branch. I worked on the phones
wow.
at Merrill Edge. So essentially, uh, that was the best way for me to get experience. I was doing like 40 to 50 phone calls a day, lots of conversations. I mean, that's how I got my experience, was just sheer volume
Yeah.
and solving people's problems when I didn't really know the solution. But I was like, listen, I don't know the answer to your problem. But if you give me some time, I will call you back at this date and time and I will have an answer for you, whether I have solved it or not.
Yeah.
And just doing what I said I was going to do to people was really the biggest difference maker. And just like telling them, like, listen, I don't know how to solve this, but rather than having you sit on the phone for 2 hours, let me make some calls. Let me go digging.
Yeah. I liked that model. I know the office you were in. I've been in there and spoke
It's
at
a
it.
cool model. I always thought like, hey, wouldn't it be cool if they allowed us to build books on this model to help retain us, and we can like build up a client base using their phone systems, and for
Yeah.
like a nominal fee, people can have a dedicated advisor. I was like, that would be really cool.
Yeah.
Obviously, they never did that because that would be giving up too much of the pie probably. And ultimately, I mean, I don't know where the business is going, but it seems like it's getting too technologically driven and getting away from that art, like you were saying, with like creating these strategies by hand, which technology nowadays definitely makes that process faster. But in order to be a true artist, you have to know how to use the technology.
Yeah. There's no doubt about that. Yeah, it's really interesting. I'm surprised that, we're sitting here coming into 2025. It doesn't really make sense to me that money still is the number one cause of stress because think about that for a second. You have more technology than you've ever had at your fingertips today. You have more access to products, services, information, but the level of stress today is higher than it was before. I mean, it's so interesting to me. We have, um, we're at record high markets right now. So why is stress rising? To your point on this art aspect, if there's more technology than ever before, more products, more solutions, more everything, it's like the Matrix. Like you can load up anything in a second, and there's still these really high levels of stress. And that's actually what the journey of Anasova is. So we started direct to consumer trying to connect people to ideas, but we could take that first step, but the drop off to action was zero. Like people just would not take that next move. So there's a role for a person to nurture the relationship, to interact with people, to help guide them. And
I
there's a
believe
very high correlation between low stress and working with an advisor.
it's all psychology and mindset and how people are spoken to about money growing up. And
Mhm.
then people don't know how to break out of that. For example, everyone's like, if only I had $1 million. Like, where does that come from? Is that from a song
Right.
like in the 70s?
Oh, yeah, it's the bare naked ladies, right? If
If
I
I
had,
had $1 million. Well, how much? All right. So whenever that song came out, like
Mhm.
$1 million ain't $1 million now.
Yeah,
Like $1 million is way less. And people are still thinking like, oh, if I only make, I want to make six figures, or if only I had $1 million. It's like, people are thinking, in my opinion, too small. Like you got to think bigger. That's what I learned from Arnold Schwarzenegger. He said, never think small, always think big. And he was like, if I listened to my family, I would have married some lady named Heidi. I would have became a police officer. And I mean, it's just like this mindset, like, hey, I want to make six figures. It's like, why stop at six figures? It's only 100,000. 100,000 isn't, I mean, that's lower middle class now because of all this inflation. And I think people need to think bigger and rather than relying on technology, which technology is important, have a system that they can follow. And when things happen, such as interest rates go up at the fastest rate in history, you have to know how to take advantage of those opportunities. Or when dirt is more expensive than oil, and take not stupid risks, but calculated risks because they just make more money. They just print more.
Yeah. Yeah, I worry about the money printing part of things. I do think, I mean, $100,000 and $1 million are still meaningful, but they're
I mean,
less
don't get
meaningful.
me wrong, there's still a good chunk of change, but $1 million in 1980. I mean, Warren Buffett
Yeah, that's
raised
very, yes,
he raised
yes.
$100,000 for his first fund allegedly. That was
Who
like
did?
that's raising like Warren Buffett when he first started his fund.
Oh,
He raised like 100 grand. He put in $100, but that was like raising $1 million today. So it's like, hey,
oh, yeah,
Tom, if you're starting a new company and you got people to give you $1 million to start up, like that was basically how he started. I mean, that's a lot of money to start a company. I mean, most entrepreneurs start their company with like $1,000.
yeah, yeah. It is an amazing story and journey that he's had. But I think your point on how you have this incredible amount of technology and there's this art component, that's where these stories converge. That's what the path of Anisova has essentially been, and what we'll be trying to solve, I think, for the next 25 years on both sides.
Heck yeah. Well, Tom, you're doing it all. Appreciate having you on, and we'll see everyone next time. Bye.